Stocks are lower as investors brace for Powell's speech in the morning. And while there's uncertainty around the size of the September cut, my next guest has enough faith that she's putting her money to work in small caps. For more on how she's positioning, let's bring in Julie Biel, the chief market strategist and portfolio manager at Kayne Anderson. Julie, I don't know if you caught part of that discussion. What do you think? I listened to Darda. I think he's persuasive, but you seem to see things differently.
No, I actually do agree. I think that there are enough concerns in the economy for everyone to be a little bit thoughtful. Part of it is valuation, which really is about forward expectations, and they seem quite high to me. Now, that's not true in small cap, and I think there are opportunities to find good quality names in small cap. You have to be extremely selective in small cap because they can be more cyclical and they can be more economically sensitive. It just is a function of finding businesses that are really resilient and durable. Software is a great place for that because the earnings tend to be more recurring.
You have Aspen Technologies, Certera, I might have these, Saya, and then some other, Ollie's Bargain Outlets, Old Dominion, TJ Maxx, Ross Stores. So software, though, is the place you want to still be looking?
Well, I think for investors who feel like they've really missed out on some of the AI boom, software's kind of an interesting place in small cap, right? Because right now we're in the infrastructure build out of AI, but there are early adopters of some of the programming and generative AI language in the software developers. And small cap software is actually a place where they are leveraging that technology to make themselves more efficient, to make their product roadmap happen faster. And a lot of these businesses actually have been using AI for almost decades. Aspen's a great example of that, where they use really advanced process optimization software to make all kinds of oil and gas refineries and chemical companies more efficient. So that's kind of the type of software names that we like.
Love that. You also say people aren't talking enough about the Canadian rail strike. We've been trying to highlight that lately, and maybe you can tell us how you'd play it.
Well, I think what's kind of interesting is we've already seen action to offset some of any kind of snafus that we're seeing on the Canadian rail strike. So we've seen major volumes increasing, particularly on West Coast ports, and that could be an opportunity for the LTL transport companies. So Old Dominion and Saya is a small cap play way to play that. I think both of these companies have been under a lot of pressure, and I think that this could actually be an opportunity to see some improvement in their fundamentals.
All right. Do you do anything with the election right now, or you wait, you watch, you ponder?
I think we wait, we watch, we ponder. I think what's more important even than the top of the ticket is everything that's happening below, because we're in such a fiscal precarious situation with the deficit. And I think what amazes me is that we continue to hear absolutely nothing about that, right? It sort of feels like when you're hearing both candidates that this is like a high school election where they're offering no school on Fridays. It's that kind of situation, right? But they're not actually dealing with the reality of where we are with this fiscal deficit, which is more concurrent with what you would see of unemployment at 7%, not 4%. So the cushion that we have in the economy is pretty thin if there are any kind of economic disruptions.